I hope you all had a good day. I hope you all did not trade New York AM session, but if you did, I'm going to be reviewing that today. I'm really tired from skiing and I didn't sleep a ton last night, so I'm going to try and keep this short, but I'm going to be talking fairly slow. I have two things to go over today. One is trade review. I did not trade, but I was going to go over the New York AM session, even though I was not planning on trading in the New York PM session, which was tradable. But before we do that, I wanted to go over the macroeconomics um, of the Fed not cutting rates and keeping rates the exact same and how this kind of affects everything. As we all know right now, the Israel and U.S. war with the Iran, which has effectively closed the Strait of Hormuz, is the current reason that prices of gas in the U.S. have significantly grown. The Fed hold and the Russian sanctions waiver and spiking energy prices are all a um, output of that. So the Fed held at 3.5 to 3.75%, and they voted 11 to 1 to keep rates anchored at that percentage. The problem here is that the Fed is currently caught between a weakening labor market that would normally justify a cut and a re-accelerating inflation driven by the oil shock. So um, there's a lot of issues with that, honestly. Um, Trying to just go over my notes that I had. Uh, mm, mm, yeah, no, I don't really have a whole lot other than that. Unfortunately, the Treasury Department's waiver permits for countries to purchase Russian crude loaded on vessels as of March 12th only goes through April 11th, which doesn't, and and Russia only produces 10 million barrels a day, whereas the Strait of Hormuz produces it's like 13 to 14 million barrels, so that doesn't actually help price all that much. That's why markets, generally speaking, are shrugging it off. It's pretty much becoming like a funding mechanism for Russia's war with Ukraine, as they're selling barrels at $80 a barrel right now, and so that's why our oil market is kind of shrugging off um, this release of Russian oil. Um, Also, Russia was exporting to Asian countries already, so it's kind of hard to tell how much this actually helps the global supply of oil in general. Other than that, for gold, we have rates are on hold and inflation is rising, so this allows for like a possible stagflation. I mean, not like necessarily, but it opens the door to that possibility. And it which is a strong driver of gold. And then there's the geopolitical war, which is like gold is often treated as like a flight to safety. Um, and then there's also dollar uncertainty with geopolitical instability and a lack of institutional confidence. Um, so yeah, I think overall there's a stagflation risk that I think we can worry about. Um, we also lost, I think, over 90,000 jobs last month, and we've lost jobs. We've lost jobs f 5 out of the last 9 months. So we're kind of in a precarious situation, at least the Fed is in particular, with cutting rates, holding rates, just trying to justify cutting rates, which would be politically sound, at least for the Trump administration. But um, objectively speaking, for the Feds to cut rates can't fully be justified in the situation we're in. But yeah, that's kind of it for me right now. Um, Ooh, bonds probably did well today. We're gonna go ahead and look at bonds real quick, and then I'm gonna show you. Yeah, there we go. This is TLT. If you guys don't know already, bonds are subject to large. They're sensitive to inflation rates. Um, I'll go over bonds another day. But yeah, this is the 20 plus year treasury bonds. It has the ICT filter on right now. Oh, but for stats, this is called tradingeconomics.com. I think this is really great. It's literally just a website that gives you all of this is interest rates. This is what I was looking at earlier. We also have your M1, your M2. Um, you can look at they have a bunch of different versions in here. Yeah, like they have government debt. You can monitor government debt, military expenditures. I don't look through a ton of these. I look through some of consumer, a bunch of taxes. I'll look through a bunch of this. Oh, labor, GDP, and then a little bit of markets. But this has like a ton of data in it. So if you ever want to like come and look at macroeconomics and how like inflation rates and whatnot are affecting things, I suggest you come here. Anyways, we'll cut from here to the analysis for today. I kind of just wanted to share where we were at with that. I am. Excuse me. I am a high school student, and I have not like majored in macroeconomics or anything. I just spent time looking at macroeconomics, and so that was kind of my view. So we're gonna go ahead and go over this morning session. This morning session, this return to this level right here makes complete sense. I would not have suggested trading morning session at all. Seems kind of dumb in my opinion, for a lot of reasons. One, we had FOMC in the afternoon, which is why we were pretty stagnant in Monday and Tuesday. There was some volatility Monday and Tuesday, but not as much as I would have liked. And then a lot of the reason there was this chop here in the morning before we had this bearish move. But this move could have been justified by this 5 minute bearish fair value gap. Asia lows are at pretty much the consequent encroachment of this bearish fair value gap. There's also this buy side liquidity. And then if you look back here, this blue line on the 1 hour is in order block. So we have a move up that takes out liquidity, and then our move down. Um, our move down, and then our move up, which changes our delivery, our price delivery, and this change in price and delivery right here, this bullish candle right here, aligns perfectly with um, aligns perfectly with this reversal on the 1 minute. So if you guys were trading New York session, I would suggest looking for this and then recognizing that from that, we then had a bunch of chop. But then after that, after the chop that we had entering into the New York game session, we had this market structure shift followed by a move up to another market structure shift, followed by this move down to another market structure shift, which came up and perfectly tapped this order block right here, which you could have entered on, getting out at the sell side liquidity. I would not have suggested trading this New York AM session. What I would have suggested was the afternoon session after FOMC came out, right as New York PM enters, we go ahead and we take out liquidity right here, and we don't end up taking out this, I don't think. The high is 24,917 flat, and the high of this is 24,916 and 3/4. Yeah, so we don't. But we ended up taking out this buy side liquidity, but more importantly, right as it opens, we continue our bearish trend, which is our prevailing trend on the higher time frame, aiming for this sell side liquidity, and then these previous day lows and low of days. Um, so how I structured this was right as New York PM opens, we have this move up followed by move down, a little bit move higher, but we're kind of sitting within this equal range right here. Nothing's really moving up or down. And then right here, we get a market structure shift with this close on the candle. And so I went back to this candle. The reason I went back to this candle is that I am looking for changes in price delivery. And this was a really strong change in price delivery that led to new highs right up here before we had a close below a previous swing low, which led to our market structure shift. It'll make more sense as we go lower, but this was your first possible entry where we then went down, took out sell side liquidity. And then some of you may ask, well, why didn't you choose this as your order block? And my reasoning is that we went up and then we came down, which doesn't create very strong bullish price delivery. However, on this candle, we may have gone down a little, then we went up, and then closed near it, making a very full candle, which in my opinion is a change in price delivery from this bearish move down and then this large wick to the upside. So I chose this. You could choose either one really. They both provide two entries, one on this wick and then one on this wick. And then I'm looking for this sweep of sell side liquidity. We close below it right here. And then I go back looking for a change in price delivery. We get this big move down, and then we get a really strong candle right here, which is that change in price delivery, where we then get two entries, one right here. I guess you could call this one right here if you wanted to. I wouldn't count it, but if you wanted to, you could. And then there's another entry right here. Keep in mind, um, with this, we took out the sell side liquidity. So you could have taken off some contracts there before adding more right here. And then we took out the sell side liquidity, closed below. And then there was an entry once we returned to this order block right here, which the reason I chose this order block is we have this big move down, and then the change in price delivery starts right here as we move up, and then we move up again. Um, so this was my order block, and so there was an entry right here, and there's an entry right here, and um, and then we're looking for uh, if you did enter right here, you would probably um, you'd still be carrying this down, looking to take out this low of day or previous day low. Sorry, the labels are a little off here. There's two of them, so if you take out, I can't tell what these two are. I think they're low of day. I think they're low of day and previous day low. Um, yeah, looks about right. But if you enter on here, on this right here, you'd carry it down, hoping to my last final take profit had I been trading would have been this right here, and we didn't hit it. So we came up to this order block once more. You could enter in with some more contracts before exiting right here, and it did end up going lower and filling this previous end walk of pretty much the consequent encroachment of it. If you take this right here, yeah, we come down to the consequent encroachment and have a pretty strong reaction before we go to the upside. So yeah, that was my analysis for today. Like I said, I didn't really see any reason to be trading in the AM session, but after FOMC dropped, this was a really smooth um, just move down. I mean, this was just beautiful price delivery. ICT concepts in full play. I mean, they were just gorgeous. Um, I know I've talked about TapX in the past. If you guys don't remember, um, he's really great at catching high of day and low of day. He's like ICT purist, but he is phenomenal. And he caught a trade from right here all the way down to I think right in here. He held it for 11 hours and it was like a 1 to 84 risk to reward. So if you guys are interested in that, I suggest checking it out. It was pretty sweet. I thought it was pretty cool. And yeah, no, it's a really sweet trade to watch. So that's gonna be it for me today. A little bit of a macro update, and then just so nobody freaks out, I did not trade. My last trade was taken yesterday. So yeah, that's it for me today. I hope you all had a good day trading if you did, and otherwise, I will see you all tomorrow. Thanks for watching. I hope you enjoyed. See you guys.